So, hello and welcome everyone. In last class, I explained you about uh, interest rates, and I told you about the difference between administered interest rate and free market interest rates. Right? India started with the administered interest rate, and after economic liberalization, the effort from RBI and government was to liberalize the interest rate. Liberalize the interest rate in terms of interest rate must be market driven. Though there, wherever it is required, the administered interest rate will be there. But the effort was what? The effort was to make them free as possible as right. And in order to make them market dependent, there was a need to introduce short term interest rates as well as very short term interest rate. So in a few years after economic liberalization, RBI has introduced permanent facility of short-term interest rates. And in last class, I told you how the short-term interest rates are the more capable instrument for the financial market rather than very short-term or long-term interest rates, right? So all these things I have discussed with you, and I told you RBI uses bank rate as a long term interest rate, whereas repos RBI uses for the short term interest rate, and marginal standing facility as a very short term interest rate to manage the liquidity in economy, right, and in the financial system. Fine. So first I'll explain about the bank rate. Bank rate, for the bank rate, the mention is in both RB Act as well as Banking Regulation Act. Both Act talks about the bank rate. Why they talks about the bank rate? Because RBI functions as a bankers bank. RBI functions as a bankers banks. So whenever the bank they need money, loan or advances, that loan and advances will be provided by RBI, right? And the interest rate the charged by the RBI will be primarily bank rate, right? So primarily there will be the bank rate offered by the Reserve Bank of India. And as I told you in the last class also, it is a long term interest rate. Why it is known as a long term interest rate? Because minimum 1 year interest rate will be charged. Minimum 1 year's interest rate will be charged. And I already told you this thing, but again reiterating this thing is what? Interest rate is also known as what? Discount rate. Or sometimes what, when you will providing the loan, RBI provide the loan to the banks, the term is used as discounting of bill. Discounting of bill. What it means, that means the loan given and taken by two people. One is RBI. Suppose RBI is giving the loan to bank, right? And that process of providing the loan is not verbal in the nature. It is not verbal in the nature, but on the paper, on the proper paper, and that paper is known as bill. That paper is known as bill. So suppose that bank want 100 rupees as a loan from RBI, and RBI said that what? RBI said that I will charge 6% interest, right? So I will charge 6% interest. Then in this case, what bank will be requested, not requested or instructed by RBI. RBI will instruct bank to prepare this paper in this manner. what bank will prepare as per RBI guidelines. Bank will prepare this paper, proper stamp paper. RBI will prepare, bank will prepare this paper by mentioning this paper is having the worth of 106 rupees. This paper is having the worth of 106 rupees. Whosoever will purchase this paper, I promise to repurchase this paper by paying 106 rupees. The maximum price is 106 rupees, and whosoever will purchase this paper, I'll promise to repurchase this paper from RBI by paying 106 rupees. Right? So RBI will purchase this paper on the discount of rupees 6. So RBI has discounted with rupees 6 and purchased this paper. So RBI has given 100 rupees by discounting the bill. So this process will be known as discounting of the bill. So RBI has discounted the bill of whom? RBI has discounted the bill of bank, right? Similarly, sometimes students do ask, sir, it's simply, it can be written, this paper is of 100 rupees, duration is 1 year, and after 1 year, bank can write in this manner also. Bank can write in this manner also, this paper, not only bank, anyone, because in market, borrowing and lending happen only on the basis of written promises, not verbal promises. So anyone, whether government, RBI, bank, financial institutions, whosoever is in the process of borrowing and lending in the formal setup, they have to write a bill, right? Through the bills, this process will happen. So sometimes students ask that, sir, we can use the simple process. Bank can write that this paper is having the worth of how much? 100 rupees. Whosoever will purchase this paper, bank is bound to repurchase this paper by paying 106 rupees. It is going to be very simple. Then there is no need to use this confusing word kind of discounting and all. Why? So the reason is, if the paper is being written in this format, it is 100 rupees paper, and this 100 rupees paper is going to generate 106. So whosoever is going to purchase this paper is going to get the profit. And this profit is clearly visible on the paper. This profit is clearly visible on the paper. So as per Income Tax Act 1961. As per Income Tax Act 1961, there is concept of TDS, tax deduction at source. You can pay the tax, you can pay the income tax after getting the income or even before the getting income, right? So TDS means what? First you have to pay the tax, later on you have to file your return. If you have paid extra, we will return it, taxation department will return it. If you have not paid the proper tax, then you have to pay the tax, otherwise we will serve you the notice. This is the way how the income tax work, right? So this paper is clearly showing the profit is going to be made by the person who is going to make the profit. So who is going to purchase this paper? RBI. So definitely RBI will gain the profit. So now it is duty of this bank as per Income Tax Act to cut the TDS. To cut the TDS. So bank will pay not 106. Bank will not pay 106. Bank will say that 100 rupees is the primary and 6 is a profit, and on 6 we are going to deduct 10%. For example, 10%. It is maybe 10%, 20%, or even 30%. So in this case, just we are considering 10% TDS is being cut. So rather than paying 106, bank paid 105 rupees 40 paisa. To whom? 105 rupees 40 paisa. To whom? To RBI. So RBI got furious. RBI got furious. What nonsense is? You have promised you will pay 106 rupees. RBI will say you have promised, right, to pay 106 rupees. Why you are not paying the complete amount? Why you have deducted this 60 paisa, where is 60 paisa? So bank will say that as per Income Tax Act, I have cut the TDS. RBI will say that as per RBI Act, we are not supposed to pay any tax on our income. Right? As per RBI Act, RBI is not liable to pay the income tax. Whatever the profit RBI generates throughout the year, at the end of their financial year, and one thing, remember that the financial year for the RBI. Can anybody tell me what is the financial year of RBI? When RBI financial starts? Hello Nikki, hello Chetan. Yes. Answer please. RBI's financial year? No, it is not first. Not 1st April. What about 1st July to 30th of June? RBI's financial start from 1st April to 30th of July. It is not 1st April. 1st April, this is the financial year for whom? 1st April is from June to July. It was. Now it is changed from 1st April to 30th of July. Anybody else will throw the light on this issue? So it is April to March or July to June? Nikki is saying that, sir, your lecture is awesome. I just completed your lecture within 3 days. Sir, your lecture is. Yes, lectures are enough. Lectures are enough. Acha. Now it is April to March, but earlier it was June to July to June. Can anybody tell me why they have changed this financial year and why earlier it was July to June? Okay, okay. April to March. So it is not July to 30th of June. Okay. But why? Why they have changed it? And why earlier it was July to June? So once I'm going to explain what the concept I am explaining here. Only then you will know that why it is being changed. Right? Why it is being changed. First you will understand why it is being changed. Then I will tell you why earlier it was 1st July to 30th of June. Why it was earlier 30th of 1st of July to 30th of June. Then means this thing you will understand later. First understand why they have changed. Right now, yes, it is 1st April to 30th of March, 31st of March. But why earlier it was, I'll let you later. So what RBI said? RBI said to bank, why you are paying 105 rupees 40 paisa, you have to pay 106 rupees. Bank said that as per Income Tax Act, because we are under this regime, we have to cut the TDS. RBI is saying that no, we are not part of any kind of income tax regime, so there is no need for us. Bank said that that is your issue. You have to tackle this thing with the reserve means income tax department. That is not our headache. We are doing as per the law. So RBI went to income tax department and RBI said that what? RBI said that you have deducted 60 paisa as TDS. 60 paisa as TDS, you have to return this money. You have to return this money because we do not part of Income Tax Act and we do not part of any taxation regime. We pay the dividend to the government. So that's why you have to return it. So what Income Tax Department is going to do? Income Tax Department is not going to return that money immediately. Just consider this transaction, this communication is made today. Just consider this communication is made today. Today is 20th of Jan. So RBI has communicated to the Income Tax Department to return our 60 paisa. So taxation department said that see, we can go for any kind of the final calculation at the end of financial year. So once the financial year is going to end on 31st of March, when it is going to end by 31st of the March, only then we will do the assessment, and you can send your income tax return where you can mention that ki we have deducted 60 paisa which we have to return. We will check the accounts, and after checking the accounts we will do the refund, but at least you have to first wait 31st March. After 31st March, then you have to file a return. Your return, we will do the assessment, and after assessment, if we will find that whatever you are claiming is right, then we will return. So RBI is going to say that what nonsense is going on. We are not part of that. So taxation department is going to say that we are just following the procedure. What procedure is being made? So this is going to be very hectic. And plus, RBI is going to do all this activity only after finishing of their financial year. RBI's financial year is starting from 1st of July and it is going to end on 30th of June. So RBI have to do all the calculations till then 30th of June. Taxation department is going to calculate all these things 31st of March. So every year maybe there is a lot of discrepancies. Will be there. So it is better to sync the financial year. Earlier, the proposal when Mr. Modi became the Prime Minister in 2015-16, while presenting the budget, government has shown its intention to change the financial year from 1st April 31st March to 1st October. Not 1st October, 1st Jan to 31st December. This intention was showed by the government ki in next 2 years what we are going to do. In next 2 years we are going to change our financial year from 1st of January to 31st December. And even state of Madhya Pradesh in 2016-17 they have changed their financial year. Right? Then the GST, and after GST, demonetization. So two back-to-back thunderstorm hit Indian economy. That's why finally in 2019, government said that we are abandoning this idea of having the financial year from 1st of January to 31st December. How this is significant with related to RBI's financial year? Why government want to change the financial year? The point is, as per international accounting norms in most of advanced economies, right? As per accounting norms, most of the advanced economies follow this practice using the financial year from 1st January to 31st March, right? So what government was intended, if our financial year is going to sync with all advanced economies financial year, most important companies all over the world, their financial year, so India can be considered as more attractive destination, not only because government is providing lot of facility, but the accounting standards in India, calculation standards in India, taxation standards in India are also in sync with our taxation system. So it is going to be more easy way to doing the business. But government in very quick succession when they put the GST reforms and they went for the demonetization, after doing all these things, government found that it's very difficult. It's very difficult to do the syncing. And apart from the government of India, all state governments have to agree on this. All state governments also have to agree on this. Only then this can be implemented. Right. So most of the people are disagree to agree. They are agree to disagree. Right. So finally, government has abandoned this idea to having one common financial year at one stroke. Right. So now government is doing what? Government is trying to have a kind of syncing approach. So First of all the financial institutions like RBI has changed their financial year from 1st of July to 1st of July to 1st of April. Right? RBI has changed. So now government can again start thinking about having one common financial year as per set global practice. So earlier government tried to did the reform in one stroke, right? In one stroke change everything. Now government feel that in country like India where the democracy and dissent is very important, it is not possible, so do it gradually, right? So this is the reason why they have changed their financial year from 1st of July to 1st of April. Understood? And I hope you also understood what is the problem if you will use this kind of the paper where profit is clearly visible. However, on this paper, what is the amount mentioned here? The same amount mentioned here. Though again, on this paper, you are getting the profit of 6 rupees. You are getting the profit of 6 rupees. But it is not clearly visible on the paper. It is going to be available in the bank's balance sheet. At the end of financial year, bank will show that we have given 6 rupees as a profit to the Reserve Bank. Then income tax department may serve the notice to RBI, you have to pay the tax on it, and RBI will reply, no, we are not supposed to pay any tax because we do not comes under the category of income tax payment regime system. So this entire hectic process can be avoided by using the discounting of the bill. So that is why apart from between RBI to Government of India, RBI to Government of India, RBI to banks, they use this discounting. Whereas this discounting of bill is also used by all private firms. Why? Because they can avoid TDS. Though at the end of financial year they have to pay the tax because RBI is immune to income tax, not private firm. Private firms are not immune to pay the tax. So private firms or private person have to pay the tax at the end of financial year. So the point is, if TDS you have to pay 60 paisa today as a tax on 20th of January. But if the discounting of will be there, then you have to pay that tax on that 60 paisa only after 31st March. So money will be remain with you. Money will be remain with you. So this is the reason why discounting of the bill system is used while lending and borrowing. Clear? This point is clear? हितेश is asking, sir, RBI grade B के लिए book list suggest करिए please. See, I'm almost getting this question again. Now I'm going to declare I'm the book. I'm the book and I'm available here, right? So no book is required, just a practice book, whatever the practice book you want to purchase for economy and finance, right? For my part, there is no book is required, absolutely no book required. Follow the lectures, right? And do the practice, that's it. For other, I cannot comment because I am not having the expertise for other sections and it is not right for me to make such kind of the comment for the other section, right? So I am the book. Okay. So I am the book and I am available here to help you. So just follow these things. Nothing else. No requirement. No requirement for grade B. Even if you are preparing for the UPSC civil services, these lectures are good enough. Those for those parts which are in sync with these lectures. Even there, they are not going to be on this way. I'm giving you very elaborated understanding about each and everything, in depth, elaborated, right? So even these lectures are very helpful for even UPSC exam, which is considered as a topmost tier exam. Fine. Okay. So now, so discounting of the bill I have explained. Fine. So I was telling about bank rate. So RBI since beginning is offering the bank rate, and it was the only established loan instrument for the banking system till then 1998. Till then 1998, one permanent facility for banks to borrow the loan from RBI was bank rate system, right? Was the bank rate system. From 1998 onwards, some other facility were introduced. What it means that it doesn't mean that ki only bank rate was there, though there was certain facilities, but they are very temporary in the nature. They are not permanent in the nature. From 1919 onwards, you have started liquidity adjustment facility, LAF, right? LAF facility on, you can say that pilot project mode, and it was finally settled in year 2002 when it was become permanently available at all the time. So from 1999 onwards, RBI start doing the testing with the LAF, and under LAF, two kind of the facility, repo and reverse repo is there, right? So before moving from bank rate to LAF, one thing I just want to clarify you is the interest rate offered by RBI to bank is bank rate, right? A one similar kind of the word is base rate system. Base rate system. Now this base rate system in its most upgraded form is available in the form of MCLR system. So, what is bank rate? I have explained how bank rate and base rates are nearby the things, and what is MCLR. First, I will explain this one, then I will jump to LAF, that is Repos Operation. Right. So, when there is a bank, it is RBI, right? So, banks have borrowed 100 rupees from RBI at the interest of 6%. Now bank have to give this loan to either individual or company, right? So definitely if you have received the loan at 6%, definitely you are not going to offer this loan to individual or company at 6%, because you are not going to gain anything. Number one. Whereas you are running an organization and you have certain expenses, right? And you are running this organization, you have certain expenses, and you are running this organization for whatever the motive, but profit is one of the motive, right? You are running this organization, maybe other motives are also there, but one of the motive is to make the profit. So if you will offer this loan at 6%, then definitely you are going to be in the grave loss. So definitely bank is not going to offer at 6%. Now question arises, what maximum interest rate and what minimum interest rate can be offered by bank? And you know that Indian banking system have a kind of asymmetry. Asymmetry in terms of the size of the banks. There are big size bank and there are some small size bank, right? So big size bank and small size bank. So because of this asymmetry in the size and operation and business and their reach, there will be an issue while offering maximum interest rate and minimum interest rate, especially the minimum interest rate. Some banks can use this advantage because of their huge size of the business, right? They can offer little bit lower interest rate, right? So they will definitely in the edge, and it is going to be very difficult for whom? Very difficult from for this small banks to do the business. So there is no kind of justified thing. But what RBI tried, RBI has introduced prime lending rate system. RBI introduced the prime lending rate system when banks are giving loan to whom? Individual or company. Prime lending rate system. What it means that there are different type of the customer. There is one regular customer, for example, industries. So a person who is running his business, he is a regular kind of the customer. He do offer, means he do take the loans from the bank from the regular basis. Whereas a one time kind of the customer, one thing. Another thing, maybe he's a regular customer, but sometimes he did the default. He not made the payment on the right time. Whereas maybe that person is an individual person and he is coming from the first time, but his economic credibility is very high. So how to decide? So to decide and lend the money, the prime lending system was started. Under the prime lending system, bank will consider a customer as a prime customer. Prime customer, and bank can offer minimum interest rates only to minimum interest rate only to their prime customers. Apart from the prime customer, you have to offer the benchmark standard, right? So this prime lending rate system was started, but there is a lot of discrepancy in the prime lending rate system. So that is why RBI intervened, and RBI started benchmark prime lending rate system. Benchmark prime lending rate system. RBI started this. But again, lot of issues and discrepancies. I'm not going in detail because all these things are redundant. They are not in action right now. But in order to understand MCLR, which is very important for this exam, very important. So just giving you in a brief, right? So they started with the prime lending rate system. From prime lending rate system, they went to benchmark prime lending rate system, and from benchmark prime lending rate system, they feel that after implementing the benchmark prime lending rate system, RBI found that is still lot of problems still there, right? So RBI said that okay, enough is enough. We are going to start base rate system. We will start base rate system. Charu Jain sir, please PDF please provide after the class. Charu madam, I already retrieved this thing many times. I'll provide the PDF. Please focus on this lecture. I'll give the PDF. Don't worry. Right. Let this part will be over. I'll provide the PDF. I'm repeating this thing again and again. Ki once this part will be over, I will give you the PDF. Just give me some time. Once the part will be over, I'll provide you the PDF. I retreated this thing from very first day again and again. Whenever the PDF question arises, I always say the same thing. For this part, monetary policy, let this part will be over. I'll give you the PDF. Right, I'll give you the PDF. Even almost it was ready, but I think few things if I'll add, it is going to be beneficial for you. So even means okay, maybe if you are not getting these PDF, don't worry, they are not very important. Understanding is very important, because whatever I'm explaining you here, lot of things I'm explaining you here, it is not possible to put those things in the words, right? The things which I can put in the words is what that is very important, like what I'm highlighting here, right? So I'll do that thing. Okay, I'll do that thing and I'll provide you. And I already promised that ki after this part, I understand your problem, because in the online learning, it's a little bit difficult to write the notes. right? Running notes, it's a little bit difficult. I understand this problem, but uh, as I told you, after this part, I'll do the workbook kind of format of the PDF, right? I'll provide the workbook kind of the PDF, but let this part will be over, right? So once this part will be over, you will see the PDF, and then you can decide कि you want workbook kind of the thing or you want this kind of the thing. Then I'll do it. But please focus on the lecture. Once it will be over, I'll provide you the PDF. Okay, don't worry. So, okay, who are the prime lenders? Anybody can be the prime lender. Anybody who has a proper financial credibility. If how you can be the prime lender, you can be the Chetan can be the prime lender if you have taken the loan from the bank in past and you have paid your all the loans in the given time without any default. So you will be a reliable customer for the bank. Otherwise, while before giving the loan, bank can assess your financial capabilities, how much assets you have, what kind of the business you have, and against that business how much loan you are going to take. In under all those conditions, they can decide you are a prime customer or not, but still that was highly subjective and largely depend upon bank's discretion, especially the manager's discretion of that branch, right? So that is why a lot of discrepancies, problems happened there. That is why this system was in under question mark from the bank and from the RBI. That is why they went from prime lending system to benchmark prime lending system, and from benchmark system they went for base rate system. So under the base rate system, RBI said that okay, base rate system will be there, and we will give you the formula. We will give you the formula, and you have to use this formula to fix your base rate, right? So earlier banks have complete freedom. Earlier banks was having complete freedom to decide whatever their prime lending rate system or whatever their benchmark lending rate system will be, right? And despite lot of efforts from RBI government, this was not working properly. So that is why when RBI introduced base rate system, RBI said that enough is enough. We will give you the formula, use that formula, right? And put whatever in your balance sheet and then calculate the base rate, and it will be your minimum interest rate offered to your customer, right? The minimum interest rate will come with that formula. That is going to be the minimum interest rate you can follow, you can give to your customer. So what is base rate? Base rate is a minimum interest rate. Base rate is the minimum interest rate offered by the bank to their customer, right? So this base rate system was working properly, but still what was happening? For example, in this case, RBI has given the loan at 6%. Bank said that my base rate is 8%. Okay. Then under monetary policy review, I'm talking what happened in the past before 2016. Before 2016, when the base rate system was in operation, then RBI under monetary policy review, RBI said that we are decreasing this interest rate from 6% to 5%. 6% to 5%. So if RBI has decreased the interest rate, what RBI will expect? Bank is also going to decrease not to 7, at least some decrease in the interest rate should be there. Some decrease in the interest rate should be there. Why? Because RBI just want to decrease this interest rate. So RBI has increases its interest rate with hope that the same will be reciprocated by banks to their customers. This is why RBI has decreased the interest rate. But what RBI was seeing, banks are still saying that their base rate is 8% by manipulating whatever the formulation RBI has given. So RBI found that the formula which we have given to the banks, it is not working properly. So either change the entire regime and bring something new, or make this base rate system more effective. So in order to make base rate system more efficient, they started calling it as a MCLR, marginal cost of lending rate system. Right? Marginal cost of lending rate system. Actually, what RBI did, right? For example, parents ask to their son, why you are not able to get selected? Arey Papa, every time you are asking me this question, but how I can be get selected? I do not have a books to prepare, right? I do not have a proper coaching, right? I'm not having laptop, I'm not having this, I'm not having that. So father was saying, okay, okay, okay. He made the list. He made the list, right? He made the list every time, because that guy was giving this excuse ki I was not having this facility, I was not having this facility, and because of this I'm not able to get selected, because of that I'm not able to get the selected. Lot of things he is giving every time, every time, and every time. Finally his father decided, okay, fine, any other thing? Yes, dad, I want to go to Delhi, and I want to go to Delhi and prepare there. Or I want to go to Mumbai, or I want to go there and I want to do the prepare. And that needs some resources. Okay, how much time do you need to prepare while being there in Delhi or somewhere else? So he said 1 or maximum 2 years. So father said, okay, fine. 2 years means every month considering expense of 15,000, right? Considering the expense of 15,000, it will be around 1,80,000 for a year. That means 3,60,000 for 2 year. Lump sum, it is around 4 lakh. So that is 4 lakh. Laptop, coaching, books, all other things will be again will come in the another 1 or 1.5 lakh. So 4 lakh plus 1.5 lakh, that means total 5.5 lakh. I am going to give you total 6 lakhs. Round figure. Take this money and do whatever the way you want to do the preparation. You have a 2 years time to settle your down. Now, earlier he was giving the lot of excuses by because of this, because of that, because of this, because of that. Now he have the money in his account and he can spend in whatever the way he want, and his father has given, okay, fine, this is the final amount which I have to make for your settlement. After that, whatever money I have, that is for my rest of the life. I have to take my expenses, so I cannot spend other money on you. So this is the final amount I am giving you. It's up to you. So now who is going to be under pressure? That guy is going to be under tremendous pressure, and you will be under the pressure to perform and do the things correctly. So similarly, what was happening, banks every time was making this case, cost of lending, cost of lending, cost of lending. Every time banks were giving this excuse ki because of cost of lending is very high, blah 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 and blah blah blah, we are not able to decrease the interest rate. Despite you have decreased the interest rate, we are not able to do the interest rates. So finally, Urjit Patel and Raghuram Govindrajan, deadly combo. These deadly combo came with what? MCLR system. They came with the MCLR system in 2016, and since then MCLR system is working, and there is no big question mark on the MCLR system. MCLR is marginal cost of lending rate system. So if they are going to ask this question, what is the minimum interest rate offered by the banks to their customer, right? That is what? MCLR, right? So whenever there is a change in what? There is change in bank rate, LAF or MSF, you can C over what? MCLR. So these are offered by what? These are offered by RBI. MCLR is offered by banks to whom? Public. So RBI want to change the money supply. RBI want to change the money supply, especially for what? Public. So RBI through banks, they will change this one, and effectively MCLR will change, and accordingly the money with the public, availability of money with the public for the purpose of lending is going to change. So this is why MCLR is very important from the point of view of monetary policy transmission. Monetary policy transmission. No, Shreya. It's not administered. If it is administered, what? It is administered, RBI will give you what? RBI will say that you cannot go beyond 7%. You cannot go beyond 7%. Then it is administered. RBI is trying to set a formula so that there will be level playing field for all government and private banks. So RBI want to make it level playing field. That is why they want certain kind of the thing so that it can work in the proper manner. Idea is not to go for administered interest rate. Administered interest rate, then there is no need to insert this MCLR. Just dictate the banks, you have to do this thing. No if and but. Implement this thing. By hook or crook with the RBI. RBI, if banks are not listening, then RBI will discuss with the government, and government will put some legislation to make RBI more powerful. Right? RBI will be more powerful with the help of government. Government will make certain laws, and that laws is going to give more power to RBI. And under those powers, RBI is going to force the bank. So this is the another way to make it administered. Here the point is to have such kind of level playing field so that big banks like HDFC, ICICI and small banks like some local banks or even some local private banks, they have kind of level playing field. So this was the purpose. And when we say about the level playing field, it is more or less what? Enabling free competition, free market competition, right? So in this way you have to understand. Is it clear? Is it clear? Okay, so moving towards MCLR. Okay, so as I explained you MCLR already, right? Just going to give you the understanding. I told you it was implemented from 2016, 1st April 2016 to determine the interest rates of loan, and it is an internal reference rate for banks to determine the interest rate they can levy on the loan. So once people will read this thing which is available on internet on various platforms, when they'll read this line, they feel that if it is for internal reference of bank, then how MCLR is important from monetary policy point of view. So since last 20 to 25 minutes, what I am trying to explain to make you understand why MCLR is very important from monetary policy transmission. For those who don't know this thing, for them, they'll understand this thing that is internally, only internally. Yes, that is internal thing of bank, but it is going to be a huge impact on entire monetary policy. So that is why RBI have to closely look over it and make it what as much as transparent, right? So that's why from prime lending rate to benchmark prime lending rate, base rate, and MCLR. So sometimes people will ask, is there any difference between what is there any difference between base rate system and MCLR system? So what you have to answer is, first of all, neither can say yes or no. And this question is one of the favorite question in the interviews, especially when people will go for as PO interview. That is one of the favorite question. What is the difference? So what you have to answer, actually MCLR is upgraded form of base rate system. In the base rate system, RBI has given the formula, right? But that formulation was upgraded under MCLR. And for your level of understanding, you are not banker right now, means you do not to administer. So we will go through only how it is being calculated. We will not go in the calculations, but we will see what are the things which is important for the calculations, right? So MCLR is what? MCLR is upgraded form of base rate system. So yes, it is different, but it is not completely different. Fine. So for calculations of the MCLR, four things are important: tenure of the premium, operating cost, and negative carry on. When we say tenure premium is basically in terms of it is loan for short term, right? Long term or very short term. Right. And in last class, I explained you short-term loans are more easy and convenient, right, for the person who is giving the loan, right, in order to recover. Right. You can go to the last lecture. If you don't understand this thing, go to the last lecture, especially in the last few part, I have explained this thing. Fine. So tenure is going to be important. So some part of the interest rate will be calculated on the tenure basis. What is the tenure? And on the basis of tenure, risk factor will be calculated. Right, risk factor will be calculated. Some people feel that very short term means very short term risk. Right. For example, in school time people have, even not in the school time, even whatever the setup you have, means if you are a working person or if you are not working, you are college going student, right? So if somebody in your class or in your office, especially in office, somebody in your office will ask you, yeah, just give me 30 rupees or 20 rupees or 50 rupees, I have to pay, I do not have a change. So you have given that money, right? Now you are going to feel embarrassed to ask him to return your money, right? You will feel embarrassed. Why? Because you, every time you will think that how I can ask him to give me 30 rupees, I am also earning good amount of money, he is also, maybe he forget 99% time people do not forget whenever they will take the money from someone. Only 1% case is there when people will forget, otherwise they always remember, right? They always remember, right? So generally always have this thing, but because the money is very low, you are feeling embarrassed to ask him to return, right? And if again the amount is very big and he is going to say that I do not have a money to return, then you, what maximum you are going to do, you are going to try to make a lot of efforts, right? Even you can see that big organizations, they are not returning the money, right? So when the money is given in the short long term, it's a high risk. Short term, I have given you the example, now implement that example from the daily life to the banks. So from daily life to the bank, if any organization is asking for very short term money, right, that shows that there is some urgent and immediate requirement, right? Urgent and immediate requirement. So how urgent and immediate requirement came? Generally, a proper well functioning organization, urgent and immediate requirements do not come, right, until unless they have to follow kind of the thing CRR, which I explained you ki how banks on daily basis maybe have some requirements to get the loan. But if there is no kind of thing is there, then why you are asking for urgent money? That means you have certain issues, and once you will take the money, to get back that money is again difficult. So that is why for the very short term and very long term, this is what we are saying, tenure premium. Okay. Then marginal cost of lending. Again, in the last lecture, I tried to explain in the very extensive manner marginal cost. If a firm is having the capacity, I have given the example, if a firm is having the capacity of 200 units, right? So if a firm is having the capacity of 100 unit, 50 here, 50 here, right? So moving from 98 to 99, again 99 to 100, cost is x, again cost is x. But if he want to move from 100 to 101, then cost is going to be y, and y is going to be very huge because he have to establish another unit to just increase production by 1 unit. But again from 101 to 102, again cost is going to be something like x. So the incurred cost incurred to increase production by 1 unit, the cost incurred, sorry. Now I hope audio is available. Is audio is available? Okay. Actually, I'm very kind of the emotional person, my dear. So what happened with me when I'll in this, I forget each and everything, and means once one time one student told me na ki sir please don't write in this area, please don't write in this area. Since then I always try to keep this thing in mind, but sometimes this happen. I'm sorry. Okay. So I was trying to give you the definition: the cost incurred to increase production by 1 unit, by 1 unit. So here this is very important, to increase by 1 unit. So it is not average cost. It is not average cost, right? Average cost means what? Total production upon means how much you are producing and what is the cost. Suppose that I am producing how much? I am producing 100 units and the cost of 100 unit is 1000. So the average cost is going to be 10. At the same time, when we have to calculate the marginal cost is going to be calculated what? How I am going to means the cost which is incurred to increase production by 1 unit. So earlier production was, suppose that earlier production was 100, now it is 101. So 101 is the production now, and earlier it was 100. Earlier cost was what? Earlier cost, whatever the cost, now the cost is X and earlier it was Y. So this is what the marginal cost, right? So marginal cost is a kind of cost. Sometimes it is going to increase with very high rate and again it will decreases. So increase and decrease, it is going to entirely disturb the entire calculations. So that is why marginal cost of fund, and those who is still not able to get the idea of marginal cost, in the SEBI lecture, yesterday's SEBI's lecture, I have explained marginal cost in very detail. Go to that lecture and see the marginal cost sort of part. Things will be clear for you. Okay, so I'm not going further detail. The cost incurred to increase production by 1 unit means, again, 1 unit increase means the whatever the amount bank is giving to their customer in the form of loan. If bank will give further loan, then what will be the increase in their cost? That is marginal cost. Operating cost means what? Bank is running in business and bank is giving the salary and other expenses, right, to their employees. So sometimes if inflation is going to increase, then definitely bank have to increase the wages, right? So all these operating cost will come. Negative carry on account of CRR. I told you by giving this example, NDTL rupees 100, CRR is going to be 4 rupees. But if RBI has said that you can maintain only 90% of CRR, 10% is free. Means you can use this from 1 to 13 days. Again, those who have not seen the CRR lecture, please go through that lecture. But for those who has already seen this lecture, 90% you have to maintain, 40 paisa is free. 40 paisa is free, but still how much you are putting in the CRR as of cash? 3 rupees 60 paisa. ₹3.60, right? So this 3 rupees 60 paisa is of NDTL, which is not going to give you any profit, but you have to pay interest to your customer because you have taken this money in the form of deposit. So this is what they are saying, negative carry on account of CRR. Some money you have to put in the form of cash, and that cash which you are going to put in RBI in the form of CRR, you have taken that money from customer by promising कि I will pay you the interest. So that means whatever the money you have put in CRR, that is going to be burden on you. So that is what they are saying, negative carry on. Negative carry on of the interest rate. Clear? So these are the 4 things you have to keep in your mind. They can ask this thing. This is RBI grade B. So it's not like that they are not going to ask. It's very complicated and deep. It's not so deep. It's well in the limit for an officer, right? So you must know this thing. So that's why I have explained in detail. Now, how MCLR is disclosed. Disclosing is also very important. Every bank earlier, they was just saying that ki, I am just giving you this interest rate, don't tell others. So such kind of the secrecy and pep talks cannot be there. Banks have to properly mention their MCLR. And here it is clearly written, they could be, they have to declare their MCLR on monthly basis, on overnight, or in 3 months, or in 1 year, or other than maturity banks fits to same. Means you must declare your MCLR. In on any bank's website, you can find their MCLR, whether it is SBI, RBI, whatever the bank, their official website, MCLR rate is going to be mentioned. Right? Even if you will open the RBI's website, they will give you the idea, the range of MCLR of the banks. By looking over all MCLRs, RBI give you an idea that this is the band of MCLR. You can see in the RBI's website. Fine. Now, last thing here is the lending rate cannot be below than MCLR. So, lending rate cannot be below than MCLR for any loan maturity. For any loan maturity, it cannot be below to MCLR, but there are some exceptions. There are some exceptions where this do not be considered. Here it is written the lending rate cannot be below than MCLR for a loan maturity, for any loan maturity, but these are the four categories which do not come under the MCLR regime. Loan, again, customers deposit. If customer already have deposited some money, then MCLR regime do not work. Loan to banks employees. That is why to becoming a bank officer is very good in the longer run. Sometimes people feel that in the longer run it is not fruitful. I have seen that many students choose to SSC to become an income tax inspector over the bank PO, right? But people think that no, a lot of under the table money I can earn and influence will be there. But in the longer run, bank employee is going to have more peace in the longer run, right? Maybe this statement will be subjective and maybe some people are not agree, but in the longer run, bank people have more peace in their mind, right? And they are more stable than any other government employee, right? So bank employees are having special consideration. They do not come under the category of MCLR, and this special loan scheme by the government of India, fixed interest rate loan with tenure above 3 years. So these three things very important as a fact, as a matter of fact. So these three things are the factual data. Factual data you have to keep in your mind. I will give the PDF. I will give this PDF along with the all other PDF. This will be going to be in the PDF. For this special loan schemes by the government of India. So there is a term known as priority sector lending. Priority sector lending. So special loans and priority sector lending, I will explain you. Point number 4, fixed rate loan with tenure above 3 years. Fixed rate loans means, see, banks have this capacity to offer the loan either on the fixed rate or floating rate. Fixed rate or floating rate. Fixed rate or floating rate means what? Fixed rate and floating rate means your interest rate is going to be remain same whatever the change in the interest rate, whether it is going to increase or decrease, doesn't matter. Your interest rate will be remain same as per the MCLR. For example, you are borrowing the loan today on 20th of January, and after looking MCLR, bank said that X will be your interest rate. So that is going to be remain your interest rate throughout your tenure. Throughout your tenure. Whereas if it is floating, so on 20th of Jan, they have calculated their MCLR and told you this will be the interest rate. But if it is floating and if MCLR are going to increase or decrease. Accordingly, your interest rate is also going to increase and decrease if it is a floating interest rate. Fine. So what they are mentioning here, fixed interest rate with tenure above 3 years. Fixed interest rate above 3 years. So bank is offering a fixed interest rate, right? Bank is having this capacity to offer fixed or floating interest rate for particular loan. So if bank is offering interest, means loan on the fixed interest rate, right? The interest rate is fixed for that particular loan and tenure is more than 3 year, then this MCLR is not required. Means what it means that bank can set the interest rate as per their own terms and conditions. That is why you have seen that in the home loan cases, in the case of home loan, some firms are, some banks are offering little bit good interest rate where the other banks, because home loans are generally more than of what, 5 years, 10 years, 15 years, 20 years, 30 years, right? So a lot of exceptions are there. Though this category na fixed loan with tenure above 3 years, this is automatically going to come under this category. So once you will understand this priority sector lending, you are automatically going to understand that. However, I hope you got the primary understanding. Fixed rate, interest rate. What is fixed rate loan? Fixed rate loan means interest rate is not going to change during the tenure. Okay. Fixed rate will be, yes, for fixed interest rate it will be decided on MCLR, right? But if the loan tenure is more than 3 years, loan tenure is more than 3 years, then bank have this freedom to decide interest rate on its own rather than they are bound for MCLR. So banks are bound for MCLR under fixed rate loan if loan tenure is up to 3 years. If above 3 years, then they are not bound with MCLR, right? Less than 3 years in the fixed, less than, no. See. I think you are getting confused. I said what? Interest rate is of two types: fixed interest rate and floating interest rate, right? If it is a fixed interest rate, if it is a fixed interest rate up to 3 year, up to 3 year fixed interest rate, up to 3 year, right? Then you have to follow MCLR. Means bank will calculate the MCLR and accordingly will offer the interest rate. But if it is what? But if it is of more than 3 years, then in that case what? Then in that case, MCLR is not bound on the bank. This is an exception, right? Whereas floating interest rate must be based on what? MCLR. Doesn't matter whatever the duration. It doesn't matter. It is for 1 year, 2 year, 3 year, 30 years, 40 years. You need not to be what? You need not to go by this exception. You must offer the interest rate only on the basis of MCLR. Clear? For point number three, priority sector lending. Priority sector lending, I'll explain in the next class in detail. Priority sector lending, I'll explain in the detail. Right. So till then here, understood? Yes. Right. Means under the loan comes under the government schemes like Sadhani. Yes. Interest rate subversion. I'll explain. It's a very important point. I'll explain. Saurabh, MCLR plus spread. What a spread means? What do you want to say from the spread? Okay, so we are concluding for the day. Tomorrow we'll start from here only. Okay? Okay. Thank you.